Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar. This is Market Today, a show where we'll help you understand the closing action on the D Street. Remember, the Nifty has slipped to the low point of the day, 190 points of a cut, and we've slipped below the 24,000 mark as well. We are hovering around 23,950 odd levels as of now. Most part of the market in terms of sectors have also slipped into the red, barring the realty and the IT pack. All the sectors are down in the red, especially it's the banks that are taking a beating today. The Nifty Bank is down by 1.3%, financial services index is down 1.6%, PSU Banks, autos, private banks, they're all down in trade, upwards of over 1%. At least 8 indices in the markets are down by about 1% odd or so. Within the Nifty, what's still holding up despite the sell-off is Trent, which is the top mover, 1.7% higher. HCL Tech, Sun Pharma, Infosys, Reliance Industries, ONGC and TCS are among those which are gaining, but very handful of them, about 7-8 stocks which are still holding up into the green. But on the downside, you have Britannia post earnings that's now slipped by 7%. HDFC Bank, one of the top contributors on the Nifty fall today, 2.7% lower at 1718. NTPC, Asian Paints, Bajaj Auto and BEL are the other counters that are down by over 2% in trade today. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. It's not turning out to be a Tuesday that was on expected lines, and it is now more or less certain that we will now test the 200-day DMA, which on the Nifty, ladies and gentlemen, is at 25,575 for the moment. So not today, but let's see when in November this touch happens. And it's one of the strongest contender within the domestic space that is under selling pressure today, which is the private and the public sector banks. It is also the weekly expiry of the Fin Nifty, perhaps its last, because from next week onwards there won't be any weekly expiries for many indices. The Fin Nifty itself is in decent pain and down 1.5% at 23,591. Across the board, there is very heavy delivery based selling, and the loan index, which is in the green, is the IT index, and it has nothing to do with the local trading. This is a US Trump trade which is happening. Nasdaq is at a record high, and that is having a nice burnished appearance on the Indian IT services. Out of the 10 stocks that make up the Nifty IT index, 9 are up, and these are a few stocks within the Nifty that are contributing to the positive total. Infosys is contributing 11 points, HCL Tech is contributing 4 points, TCS is making up 3 points, and of course you have Wipro, about 0.1 coming in from Wipro. Reliance is also on the green. If Reliance were not in the green, then we would have had a major pain. But this is how it is, ladies and gentlemen. Massive sell-off, and the advanced decline, which was positive in the morning, is now extremely negative. 650 shares are in the green versus 1715 shares in the red. It's an easy 1:3 kind of a ratio in favor of bears. And the mid caps are the ones that are hit the most. Look at the Nifty Next 50. This is the top losing index today, down about 1.3%. The PSU banking index, as I have said, is coming under selling pressure, 1.2% down, and of course the Nifty Bank 1.1% down. Mid caps are down 0.5%. In the morning, in fact, even when the Nifty was in a sideways to flat mode, the mid cap and the small cap indices were actually in the green, but heavy selling pressure also coming on then on, and that is how the situation is at the moment. The advanced decline in NSE 500 is 154 versus 345. Again, 1:3, a fairly painful day for Indian equities, and this is, remember, the start of the week. Sakshi.
Right, let's get our guest on board then to get us an understanding of how should you look at the market setup right now. Mr. G. Chokalingam, founder and MD Economics Research, is now with us. Mr. Chokalingam, warm welcome. Good afternoon to you, and thank you so much for taking the time out for this discussion. Once again, we've tested that 24,000 mark. The markets are lacking the strength to stay put at higher levels or maybe continue to bull down from there. What do you think will actually be able to pull up the markets from this extremely volatile and range bound trade that we've been witnessing for 1 week at least in trade right now? And do you think there will be further downside that one should be prepared for?
It's my pleasure to come on your channel. Interesting questions you have asked. What could help the market to turn around? According to me, two factors. One, the FII selling should taper off. And second, apart from FII selling, what contributed to the meltdown is, as I've been saying on this channel for last 3-4 months, stretched valuation of a lot of individual stocks in the middle and small cap space. Many stocks have hit even 80 PE, 100 PE. Now that is also causing a big problem. And in that you also had recently listed IPOs. Even the last making companies which came out with IPO, after listing they doubled and now they are down 50%. So what has happened? The liquidity crunch has been caused by both FII selling in the large caps and selling pressure in the overly stretched stocks in terms of valuation in the small and mid cap. So therefore, the answer also lies in this explanation. If FI selling tapers off, market should see a bottom. And once the SMC pack as a whole come to reasonable valuation, then the fear or selling pressure should come down in the SMC also. But however, there is a polarization within the SMC. There are a lot of good quality stocks. They are available at attractive valuation, and so many of them are holding up also in this market. And then secondly, what I mentioned, extremely stretched valuation. And that fact, I believe the correction is not yet over. It might continue for 2 weeks or 2 months. So we'll have to wait for more time for this pain to go. Similarly, FI selling, I don't think it is done. It may continue for 2 weeks or 2 months. And so therefore, 2 weeks to 2 months, the pain could continue. But however, I would suggest investors not to panic. Go for quality stocks in the SMC, not in the large cap, because our domestic institutions don't have that kind of appetite to support if the selling continues by the foreigners in the large cap. However, we all know the SIP money is pouring. Even now, every week, 7 to 8 lakh new investors are coming to the market. That is also supporting the small and mid cap. As I said, a small segment within the SMC, that is quality stocks in terms of management, comfortable valuation, all that also have become very attractive, and they will give support to the market. So I believe the medium to long term, that is beyond 3 months, the outlook looks very robust for quality stocks, individual stocks, especially in the small and mid cap. So one should use this 2 weeks to 2 months time period to slowly accumulate good quality stocks.
Actually, it's the dollar index that is creating a problem. Now what you see is the strength in the dollar, and what the market is thinking is that the policies that newly elected President Mr. Trump will impose or bring in will make the dollar stronger. And that's the reason, ladies and gentlemen, you have across the board selling in emerging markets. If you think 0.9% fall on the Nifty today is something major, look at how the other Asian markets have shut. Kospi from Korea lost about 2%. Look at how Hang Seng is down 2.8% or 580 points. The Chinese markets are the ones that are taking it on the chin. The Nikkei also lost 0.5%, something like similar to us. Look at how Asia has performed in the same territory as India, and look at how Europe is opening. The French markets, CAC 40, are down 1.1%. In London, the FTSE is down 0.8%, similar to us, and the German markets have slipped as well, as much as we have. So it is not as if, ladies and gentlemen, that it is only overvaluation in India which is the cause of the fall, and it is not as if that only India is falling. Across the board, the strength of the dollar is moving all dollar assets globally back to the US, and that is seen in the 10-year yield, that is seen in the dollar index. As long as they continue to rise, we will see a cut that is going to happen in Indian equities. In fact, Sakshi, I am willing to bet that today's FII net sale number will exceed 4,000 crore rupees, because amongst the easiest set of shares, you see selling pressure coming in. Look at Axis Bank, look at HDFC Bank, down 2.8%. These are FII favorites where it is easy to make large sales without denting the price a lot. And we are also helping in our own way. 25,000 crore rupees of fresh SIP has come into the market for the month of October. That is helping DIIs to sort of cushion this fall. And apart from 25,000 crores, there is a decent 10-15,000 crores from EPFO, from Ultra HNI. So 40,000 crore rupees is trying to hold the market at 24,000, but it's now more or less certain that over the next 4 or 5 trading sessions, we will test the 200-day moving average, which is at 23,575. Sakshi.
Okay, got that. Let's actually look at some of the other pockets which are actually showing resilience in this kind of a market. Within the broader markets, there are several stocks that are holding up. Jubilant Foods is one which is reacting on its earnings, 6.5% higher in trade even right now. Marksans Pharma is up 7% in trade. Let us also look at State Trading Corporation of India, that's up 15% in trade. HLE Glasscoat is up 14%. You have Sasken Tech, that's up 13%. Newland Labs, that's up 12% in trade. Then you also have stocks like Orient Tech that we had discussed in the morning for our viewers as well in daily calls, about 8% higher. KIOCL, that's also up and about in trade. You have Good Luck India, that's up. Pratish Nandi Communications has been in thick trade. Uno Minda is also up 6% in trade right here. And I think Uno Minda has also reported some numbers that have come in. I'll just try and pull that out, but in the meanwhile, these are the kind of stocks. I think, yes, earnings have come in. PAT is up 9% and revenue is up 17% for Uno Minda. So some results really fueling that fire within some of these broader market stocks. Mr. Chokalingam, what looks good within the broader markets after earnings? Have push has actually come in for some of them?
Yeah. So if you permit me just 1 minute, I forgot one more particular
Sure.
point to discuss. Before that, I completely agree with Mr. Shail about the US dollar strengthening. That is my point also, that the belief in the US is that the protectionism which will come from Mr. Trump would favor US economy and therefore US dollar, and that is why the money is flying out of emerging economies markets like India. Of course, in the small and mid cap, I continue to hold that the stretched valuation is also causing. So these are the two set of different reasons for two different segments. Now, another third point which will help the market to recover within 2 months or maximum 3 months. I'm extremely optimistic beyond 2 months or maximum 3 months. That is because of the third reason. In the process of dollar strengthening, the metals and commodities are weakening, including oil. Now oil is down 22%. A lot of metals also come down. So this is also going to be a big trigger for India, because that's what happened in 2008 Lehman crisis, 2016 deflationary conditions, 2020 Corona time. The oil crashed and it helped Indian economy, Indian budget to improve a lot. And even the external economic front also is a lot of improvement because of the very low oil import bill. So that is what likely to happen this time as well. Despite 2 wars you are seeing oil prices down 22%, and I expect the oil to go down further. That will help Indian economy in terms of lower inflation and the reversal of interest rate cycle. I'm pretty confident that all this would happen within 2-3 months, and in the process, the Sensex trailing P also now it has come down below 23. So anything below 22 also within 2-3 months will be a great trigger for the same foreigners to come back to India, because the foreign investors cannot ignore India. Even Mr. The Trump cannot isolate India for various political reasons. Therefore, I am extremely bullish. Now, coming to the individual stocks, there are a host of stocks. I would like to talk about a few stocks like Shall Be Limited. It's a hospital sector stock, recently listed. IPOs around 248. Now the stock is trading around 220, 222. I went through the business model, the annual report, the results. It looks fabulous to me. The enterprise value per bed is around 1 crore. Many listed hospitals are trading at even 3 to 6 crore per bed. So that is one stock. And second stock, Cyient Limited. I would again and again stress my conviction in Cyient. They have started a 100% subsidiary in semiconductor. So recent, the media interview of the Cyient semiconductor business head also gives a lot of confidence and comfort. And third would be Balmalari Company. Yesterday, Balmalari Company has announced, launching rail logistic for sale, and also they have announced logistic for certain chemicals. I believe, Balmalari Company is another fabulous stock. So these are the four small cap stocks I would be, extremely optimistic. Among them, we personally invested in Balmalari Company.
Okay, fair point. Let's, my own estimate is that this kind of selling will not stop. And if you are very keen to take positions on the long side, it's sensible to look at mutual funds. Which ones? That is a matter of conjecture and discussion. But individual stocks at this point of time is only, inviting a falling knife in your party, except for IT stocks that have gone up. There is nothing much to talk about. And even the IT index, if you look at it, is also not immune to selling pressure. Intraday high on IT index today was somewhere like 42,900. Yeah, 42,900, and we are now at 42,775. It's in the green, 0.5% higher. But who knows? When banks are thrashed like the way they are today, 51,250. Let's look at the low on the Nifty Bank today, and that will give you an idea as far as how the selling pressure was. The low today is 51,000 almost, and from there we are at 51,338, 266. So there's very, very heavy selling pressure, and as I have said since 2-3 days, the call writers now at 24,200, 24,100, now 24,000 because the index is below that, are very, very strong. They are not letting any spike move above, and that is coupled by the sustained delivery based selling by FIIs. Look at HDFC Bank today, down 2.5%. That will not let the Nifty go up, and the Nifty will in itself pull down mid caps, small caps, and other sectoral indices. Sakshi.
Okay, got that. Let's again look at a few more stocks. It's the realty space that is holding up to about 0.9% gains, and the IT space that's still holding up about 0.4% odd in trade. Infosys, HCL Tech remain the top movers within the Nifty as far as the IT space is concerned. Of course, several others like TCS and Wipro are also inching higher. And then we have the broader markets. Some of them are also at 52-week high levels, including stocks like Emphasis, for instance. Let's get Mr. Chokalingam to address the entire IT pack for us. So of course, like Shell had pointed out, there are triggers from the US that are flowing in. There is the dollar index that continues to be elevated at over 105. Do these factors continue to look supportive for the entire Indian IT space right now? Would you be comfortable to buy afresh into some of them, and where exactly?
Yeah, Very interesting question. I don't see, even before Mr. Trump won the election, the IT pack was not giving any major hope for wealth creation because last 3 4 years IT exports are growing in poor single digit in dollar term. That's not going to change. In fact, that might come under pressure, but that's not going to become a very high single digit or double digit. However, if you see for the last 5 to 8 years, a lot of small cap, mid-sized IT companies have created a lot of wealth because that also coincided with a lot of acquisitions in the small and mid cap space. That story should get life once again because, as I said, the growth is going to be poor single digit, and all these large companies are flush with the cash, and they may look at one or two acquisition to build the base and size. A lot of people, a lot of companies are interested in retaining the first position, second position, third position. So with the reduced growth, the one major possibility is the further consolidation in the industry. So therefore, I look at small and mid-sized IT stocks, and fortunately, some of the stocks have corrected even 40 45% within the small mid-sized IT, and that is a kind of strategy, research strategy I would suggest. Otherwise, you can stay invested in the large IT stock just from a defensive perspective, not for with any objective of creating a wealth, which is absolutely impossible in my firm view. But they would be defensive because rupee is weakening. As I said, next 2 months the rupee might continue to weaken because of outflow of money, not only from equity. Unfortunately, we are seeing even from the government bonds. So therefore, there is a more room for rupee depreciation, and that would act as a defensive for large IT. But one can hopefully try to look at small and mid-sized IT stocks for wealth creation
Okay.
in case they join a consolidation process.
Sakshi, one thing that's working brilliantly on the Indian side is a very concentrated ETF of Nasdaq called Mirai Asset Mafang. It is at a record high, and it has gone up for the last 5 sessions in a row, simply because all the stocks that we talk about in the morning, Tesla, Nvidia, Alphabet, which is Google, Facebook, all of them are 11 of them are in this stock, this portfolio, and I've just sent you the graph. I'm requesting the PCR to see if they can fire the chart of Mirai Asset Mafang. You will see the kind of money that people have made on this one. We started recommending it at about 33 34 rupees 18 20 months ago, and it is at about 118 now. This is where diversification of assets always matters. Let me just try and find out if I can give you the portfolio of Mafang, and that will gladden your heart as well. The biggest holding is no surprise there, Nvidia, responsible for 10% of the portfolio, 11% actually. Then you have Netflix, you have Alphabet, Facebook, then 2 more companies, Broadcom and ServiceNow, followed by Apple, Amazon and Microsoft. Just 10 holdings, about 9% each, and this is how we have seen a very good rally for the last 5 sessions. There are other mutual funds in this space. There is one that tracks the top 50 shares in S&P 500. Let me find that out, and we'll also show you the graph of Mafang a little while from now. Sakshi.
Absolutely. So that's going to be an interesting one to watch. But meanwhile, let's ask Mr. Chokalingam, how are you advising this diversification play for all your clients and retail investors at this point in time? There is talk about top investors also building up their cash portfolio at this point in time. Bitcoin, which has surged to $90,000. We have gold and silver, which are hovering around their all-time highs as well. So several assets, dollar is at 105 like we discussed. So several asset classes which are actually giving you all those all-time high levels. So what is the best way to diversify, including the markets, various global markets and various asset classes? Mr. Choklingam, are you on mute by any chance? Okay, we couldn't hear you. There's some kind of an audio glitch. We'll try and fix that maybe. Can we hear? Could you say something, sir? I think we've.
Yeah, can you hear me now?
Yes,
can you hear me now?
Yes, we can.
Sorry. Yeah. Yeah. So see, I come from always. I'm not a trader. I'm not a short-term investor, personally or in my profession. So I come from a medium to long-term investment. So I always say that don't put 100% in equity. It's not advisable. I mean 100% of your financial wealth. So I always say that minimum 30% you should park in the fixed assets. Fixed income securities like bonds and bank deposits. And about 3 months back, I was saying that one can put even 40-50% of the overall asset in the fixed income securities. And within the equity asset class, till recently, I was saying that one can have 10 to 15% in cash and gold. But let me tell you, in the last few weeks, I have completely changed my strategy. Of course, Mr. Shail may not agree with me. As I said, I always on the other side of the playground. That is, I get attracted when the quality stocks become get beaten down. I become nervous when the small and mid cap stocks are at peak. So now, after losing nearly 27 lakh crore by SMC, small and mid cap stocks, in a matter of just 6 weeks, I have become overly bullish. I may be absolutely wrong. I also know that nobody can predict the peak, nobody can predict the bottom now. From this level, it may go down 5-10% also. I'm not ruling out. But in the last 40 years, what I learned is that if you make a phased investment in small and mid cap when they are beaten down, the chance of making wealth is very high. So there can be a tough time for 2 months or even 3 months. But beginning now, one should invest. So therefore, what I suggest, in fact, I have written for last 1 week that zero the gold. Because if you are extremely bullish on dollar, you have to zero gold. When I say zero gold, within the equity asset class, definitely outside the equity asset class, total wealth, the gold has to be there always. But I am saying, earlier I was saying 5 to 10% gold. Now for last 1 week, I am saying that one can within the equity asset class, one can zero gold, one can zero cash position within the equity asset class. One can go 100% for the next 2 months. Out of that, I would say even 60% can be small and mid cap stock, because that is the only one which has created a lot of wealth compared to large cap stocks. Only small caps have emerged as a large cap in most of the cases. Now, after seeing 27-28 lakh crore meltdown, I find a lot of quality stocks. So within the equity asset class, one can put 30-40% in the large cap stocks. The balance 60%, one can put it in the quality small and mid cap stock. If you are conservative, spread your buying for next 2 months. If you can take little risk, you can start quite aggressively. So this is my firm research view at this point in time.
Okay, ladies and gentlemen, the name of the fund that I was suggesting was Mirai S&P 500 Top 50. I am just trying to again see if I can get this for you. It's again an ETF. Let me just try and get the name for you. But as we've talked about Mafang, I'm wondering if we can show the Mafang ETF in front of us. Maybe the PCR can cue me on this one. But again, the Mirai Asset fund on S&P 500, which has its top 50 shares, is for the last 3-4 sessions going very strong. That's how it is, ladies and gentlemen. We will try and show that fund to you, but let's see. Kush Godasara joins us, market expert, and let's get him into the conversation. 200 points lower on the Nifty. The 500 index is also down 200 points, which is more worrisome for me. The Bank Nifty down 640 and the IT index up 102 points. Kush, how are you seeing this mild sell-off that is happening on equities?
Good afternoon. Definitely, I am happy that I am seeing some sell-off. But if 23,800 is breached on the downside, maybe we may see some more sell-off. So it's waiting for some confirmation. Bank Nifty, especially HDFC Bank, has weakened today. So that is giving more fuel to the downside. ICICI Bank is on verge of getting a breakout on the downside. So if we see ICICI Bank breaking below 12,1275 on the futures, we may see a good sell-off on Bank Nifty tomorrow.
All right, absolutely. So this time around, what are you expecting in terms of the key stocks, Kush? Would you be looking to short some of the stocks in this current setup, or are you actually looking to buy some of the stocks which are maybe looking attractive to you at these levels?
No, I have three stocks on and third is BP. So three stocks I'm already short on, and for fourth is it's on my watch list. So maybe I will short ICICI Bank.
Okay.
.304 p.m. ladies and gentlemen, still 26 minutes left for this sell-off to sort of ease. I'm remembering those memes in which you have historical figures like the ones fighting the war of Mahabharata and saying अभी सूर्यास्त क्यों नहीं हो रहा, and I'm also wondering कि 3:30 कब बजेंगे. We need this support to come in, and the support is already just the time कि बस भाई अब जब 3:30 बजे बंद होगा बाजार तो आपको सेलिंग रुकती हुई दिखेगी. बट फॉर नाउ इट्स अ टेरेबल time in the markets. Let's look at the last 5 days if there is any index at all which is positive. Surprise, it's the IT index, up 5.5% over the last 5 trading sessions. Apart from that, all of them are into losses over the past 5 days. The metals index is down 4.2%, commodities is down 3.5%, the energy index has slipped 3 percentage points lower, the FMCG index is down 2.7%, and similarly the MNC auto index all 2% down, pharma index down 2%, CPSC index down 2%. How about the last 22 trading sessions when selling pressure has only accelerated? Well, this is really surprising. In the last 22 trading sessions, the Nifty PSU index, banking index, is actually in the green. Isn't that interesting? Let me just see Nifty PSU Bank. 1 second please. Over the last 22 trading session, yes, it is in the green after a massive fall off. Remember, just 2-3 days, 4 sessions ago, we were discussing that this is down 21-22% from its peak. This is probably the time to start buying, and then earnings came from PNB to begin with, then followed by Bank of Baroda, Canara Bank, and just 2-3 days ago SBI. So this is how it is, ladies and gentlemen. The loan index, which is up over the last 22 trading sessions, is nothing but PSU stock. Sakshi.
Right, some of the earnings that have come in, let's look at those as well. Hyundai has come out with their earnings, something that we were all looking at. Revenue is down by 8.3%. We have 16,876 odd crore rupees of revenues. EBITDA is down 11% at 2,138 crores. Margins have come in at 12.7% versus 13%, and the net profit is down 16% at 1338 odd crore rupees versus 1602 odd crore rupees. So you could see that slide that happened when the earnings had come about. 1787 right now for Hyundai India. IPO, Hyundai India share, about 2% lower in trade. Let's look at the other one. From the pharma pack, Natco Pharma has come out with the earnings. Revenue is up by 33% at 1371 crores versus 1031 crores. We've seen EBITDA improve by 75.6% at 804 crores. Margins sharply higher, 58.7% versus 44.4%. Net profit substantially higher, 83.5% higher by higher at 677 crores on the bottom line as well. So you did see that bounce that came in. Although the markets are subdued, we are now seeing 23,900 breach on the lower side on the Nifty, and that's probably leading to an all across the board. Even earnings positives are not getting penciled in some of the stocks right there. Kush, to you, 23,888 right now on the Nifty. What's next for tomorrow?
So just 80 points below, we have support 23,800. So if we breach that, and on the other side, if we are below 51,000 on Bank Nifty, that is more worrisome because Bank Nifty has been acting as a strong support since the start of October. So if we breach below 51,000 on Bank Nifty, that would be another confirmation for more slide down.
Got it. So that's the view that's coming in on the Nifty and the Nifty Bank. Real estate sector, remember this index was up by 1.7% in the morning. Let's look at the Nifty Realty. It's completely flattened out, viewers, and you can see it's at the day's low point. We had all across the day choppiness, but it still maintained a large part into the green. But we have turned flat on the Nifty Realty space. Even the IT index is now down at the lowest point of the day, absolutely flat in trade. There's an increasing, volatility across the board. PSU index, the public sector enterprises index, is down by 2.4%, viewers. Nifty Next 50 is down 2.2. Auto index is down by 1.9%. PSU Banks down 1.8%. Financial services 1.7% lower. Over 1% kind of a fall can be seen on at least 12 indices. Over 1% cut is being seen on all of these stock sectors as well. BEL down 3%, BHEL down 3.5%, BPCL, Coal India, Concor, all of them upwards of 2, 3, 4% lower in trade. Let's look at the F&O space as well to see where the pain point is emerging. Navin Fluorine 4% lower, Tata Power 4% lower, HAL, you have Glenmark, GAIL, MCX, all of these counters that are down in trade right now. Kush, do you have anywhere where one should be really looking to hang on in this current falling market, or should one just participate on the downside?
I would suggest on participating on the downside. I mean, all the stocks, for example, ICICI Bank was holding at 1290 on the future level since morning, but it has came down sharply. So I don't think anything is looking good on the long side as of now.
So, ladies and gentlemen, like I've said, it's difficult to try and buy this market at a pace which is resembling a falling knife. One has to be careful with one's limited approaches in terms of money. At my end, I continue to buy the SPI Nifty ETF, which at every decline is what I am adding. The maximum purchases will be done if the 200 DMA or around that level, the Nifty starts to move. In the last 15 minutes itself, it has now lost another 50 points, and when you look at the most recent low that was on the Nifty, just a moment please, let me remake this chart. Yes, the most recent low was 23,838, which we saw 3-4 days ago. Once that is broken, you will see a very, very sharp slide. Let's keep that for Wednesday rather than now, because it's already 3:12 and we don't know what overnight cues come in. But it's looking bad to worse as far as the Nifty is concerned, 1 percentage point lower. Let's look at what Dow futures are doing. That will give you an idea as to how disconnected we are for the broader markets. Just a moment, please. Global index futures will just come in front of me. Remember, for the last 3 trading sessions, the US markets have been hitting a record high. Well, they are flat, doing nothing at all, and I am requesting the PCR to tell me if we have the live feed for Mirai Asset 500 and Mafang. Let's see that on the screen, ladies and gentlemen. This is a way you can tap into the US equities. What you see is the intraday chart of Mirai S&P 500 ETF. I'll request the PCR to fire a longer term chart of this one, and in the last 5-6 trading sessions, this one has appreciated to the extent of 10-12%. Yes, exactly 10%. And the maximum gain has come in the last 4 sessions, when both the Nasdaq and the S&P 500 have surged. This particular fund, the Mirai S&P 500 top 50 fund ETF, has just top 50 stocks of the S&P 500, and it's doing remarkably well, as is Mafang, which has top 11 stocks of the Nasdaq. So these are very, very critical portfolio stocks, which portfolio ETFs that one must have in one's portfolio to take benefit of diversification of global markets, as also the depreciation of the rupee. Sakshi.
Right. Let's see what is in fact still looking buoyant in this market, which is continuously weakening even further. Within the F&O space, what is buoyant is Ramco Cements post earnings 5% higher, Jubilant Foodworks 5.5% higher post earnings again, L&T Technology Services about 3.7% higher in trade. These are the stocks which are top movers in the F&O space. On the Nifty, you have Trent, Infosys, HCL Tech, Sun Pharma and Grasim as among those top movers on the Nifty, along with Reliance Industries, of course, and TCS, ICICI Bank. Those are the only names that are still holding up. But the Nifty is further slipping now, 273 points lower in trade. Kush, within the F&O space, how are you looking at some of these counters which have showed a bounce back? Do you think one should chase the momentum, or the weakening trend in the markets will not really reward investors on the positive side, even if one has to stay with the trend?
I would rather, sit on the sidelines rather than catching it uptrend. Last week also we saw 2 days of upside momentum. Many retail traders have been, trapped. So rather wait for an upside confirmation. For example, 10 days average on stocks like Reliance, Trend, L&T, Titan. Just, if we follow that simply, because they have been acting as a resistance since last 1 month. So if we trade above, say Reliance 1330, until then I won't go long. So simple strategy, just follow 10-day average. If we close above that average on a frontline stocks, then you can start chasing on the long side.
Okay, got it. Let's actually look at a few broader market stocks which have actually slipped quite a bit today. BASF India is down 14.5%. You have stocks like Globus Spirits, that's down almost 11%. We also have Akums Drugs, a recently listed stock, that's down 10%. Antony Waste Handling Cell is down 10%. ITI is down 10%. Then we have Jyoti Labs, that's down 8% in trade. These are the kind of stocks that are actually falling quite a bit in this trade today. But on the other hand, those which are still being resilient, I had mentioned a few of them in the earlier commentary. Some of those that are holding up. Umang Dairies is one that's 5% higher. You have some more stocks like PNB Gilts, that's up 6% in trade. Let's also look at Newland Laboratories, that's up about 10 odd percent in this falling market. Very strong move that's being seen there. Sasken Technologies is also up and about. These are the stocks that are moving on the both downside and upside on the broader markets front. Okay, let's look at the PSU space. Now 2.5% lower. It's actually losing quite a bit of the ground. HAL now down 4.6%, GAIL down 4.5%, BHEL, NMDC, BEL. These are all the stocks that are down by about 4 odd percent. Kush, PSU stocks particularly. Will this be like a catching a falling knife if one has to invest in stocks like HAL on this downside?
No,
HAL,
maybe
BL?
definitely, BEL, and maybe we want short because they are acting, they are trading near good support level. So 205 is a good level for BHEL, 270 is a good support level for BEL. So these two stocks are not a good candidate to short. Maybe I would be stay away from HL. Still, I think 3,500 level. So these two stocks maybe I want short, but HL is a stock where I should be afraid of.
$318, ladies and gentlemen, slowly but certainly 23,850 is now going to get challenged by the bears. The IT index has also fallen, and this is now in red territory, 52,586. So as I have pointed out, that slowly but certainly you are now getting into the painful part of the fall, which will now test the previous low of 23,828, possibly a gap down tomorrow, and then the slide will accelerate. Let us see how that happens. The high for the IT index was 24,850. We are now at my apologies, 42,850. We are now at 42,572, and this is a very dangerous point. If this breaks, then obviously more selling pressure will pile on, and this is the state of play, ladies and gentlemen. Now all 19 indices that we track are in the red, and this is how the state of play is at this point of time. Nothing much to be worried about the IT index, because for the last since November 4th it's been consistently rising. 40,160 was the low on 4th of November, 40,000 actually, and from then on we've rallied till today morning, 42,860. so that's a very nice 220, almost 2200, 2800 points kind of a rally. The all-time high is fairly close at 43,000. Let's see how it goes, but the selling is now accelerating on the IT index as well. And Sakshi, as I've been pointing out, I've been waiting desperately for 330 to happen.
Yes, absolutely. 320 right now. First, Kush, if you could share with us any STBT ideas, and then we could probably look at discussing some more before the markets end.
So two STBT ideas at current levels. One is M&M futures. It's trading around 2,900. STBT M&M futures on the upside 2,930 can be the stop loss. On the downside, we may test 2,840 by tomorrow. And second, as I said, ICICI Bank. I believe if Bank Nifty wants to go down further, ICICI Bank has to fall. On the future, it is trading around 1,274. Stop loss for tomorrow would be 1285, and target on the downside 1240.
M&M Futures and ICICI Bank as STBT candidates right there from Kush. 260 points lower in trade for the Nifty 23,880. But Kush, like you have been pointing out as well, it's not just the markets. Gold and silver have also started to cool off from their all-time high levels. Crude we have been discussing since morning, how that has also seen a sharp downtick on the back of oversupply concerns that are coming in. It's only Bitcoin that is actually inching higher, and how $90,000 is what we have on Bitcoin, with more upside being expected by crypto experts. Is the money going from equities to these assets like crypto now, and from equities, gold, silver, flow is shifting out?
Definitely, you have rightly pointed out. I mean, traditional traders, are in a since last week are in a myth that gold and silver are crashing, so equity would go up. But this time things are different. Money is flowing into crypto, and that's a new asset class for many of us. So in India, maybe it's not legal, but if you look at foreign, Dubai market or US market, people are heavily buying crypto. So I think definitely, there is something wrong over globally, because gold, silver, equity all going down at a you know high speed. No, so definitely I think there is something geopolitical on the way.
3:23, ladies and gentlemen. Another 7 minutes of pain left for today, and let's just start wrapping up the market at my end at least. There is nothing of quality to report on the long side. We also forgot since morning to mark Sagility. This is an IPO that got listed at an 8.5, 9% premium to its offer price of 31 rupees. It went all the way high to about, let me just get the right one, the high was 32.87, and now at the moment at 29.24. This is below the IPO price of 30, down 2.66%. Let's look at the volume that we saw today. It's 26 crore shares that have been traded. So 26 into, let's take an average ATP कितना इसका 31. So when 26 into okay 31, that's almost 8,000 crores worth of transactions that have happened on Sagility today. But again, disappointment. Swiggy is about to get listed. As Sakshi was pointing out, Hyundai's earnings have been below par. And Hyundai at the moment, let us see what Hyundai is telling us. Hyundai is down at 1821, about 7.5% below its IPO price of 1960. And Sakshi, if you remember, Afcons was also listed late last week. This is the infrastructure company of the Shapurji Palonji group. Fantastic pricing, but again now falling prey to profit booking, down 1.3% from its issue price of 460 rupees. Sakshi.
5 minutes to go, and viewers, we only have 4 stocks on the Nifty that are holding on to the gains. Trent, Infosys, Sun Pharma, and ICICI Bank. Rest all of the stocks have slipped into the red. IT index has also given up gains now. It's down 0.1%. The Realty index is the only one that's just hanging on to those gains. Let's see if that manages to pull off in the green in the next 5 minutes, or gives up into the pressure that is being seen across the board. The markets are at the day's low point for sure. 700 points gone on the Nifty Bank, and over 3 lakh crore rupees have been wiped out from the benchmarks in the market cap as well of the BSE listed companies in trade today already. That's the kind of move that we are seeing, and 23,866 is something that you're looking at, 274 points lower in trade for the markets right now. Let's again see any other stocks that we could mark. It's Zomato that is still holding up, 260 point levels in the broader markets, about 0.8% higher in trade. one of the very few stocks that's holding up. Of course, macro tech has been the stock of the day as far as the real estate sector is concerned. That's holding up. You have JSW Energy, Adani Group stocks, some of them at least that are holding up, LIC, LTI, Mindtree, and these are the stocks within the broader markets or the Nifty Next 50 list that's holding up. But Zomato is interesting. Kush, Zomato still holding on to the gains in this very, very weak setup in the markets. Your own sense?
As a disclosure, I'm holding Zomato in my long-term portfolio. So as a long-term, I think definitely it's a good stock and it's holding on at 250. But if you're a short-term trader, you should keep 250 as your strict stop loss. Definitely today we are seeing some good momentum, but it could not sustain on the upper side. So 250, which is a 10-day average, this is one of the few stock in such market which is trading about 10-day average, except IT. So definitely, I think 250 should be a strict stop loss for short-term trade. But if you are an investor, you can stay invested.
Okay, got that. So that's as far as Zomato is concerned. 280 points now lower in trade as far as the Nifty is concerned. It's the broader markets that are definitely taking a beating, over a percent loss for both mid and the small caps. On the small caps front, ITI is down 9%, Jyoti Labs is down 8%, Piramal Pharma 7% lower, BLS International 5.5%, SW Solar is 5% lower, Great Eastern Shipping, Chennai Petroleum, MCX, Naveen Fluorine, Tejas Networks, they're all lower by about 4% in trade as well. So a whole host of stocks that are dragging within the small caps basket. In the mid caps, let me point out the key stocks that are actually okay, so there are no Nifty mid cap winners are there. Let me just quickly see. I'm hardly getting any names on the winners list as far as the Nifty mid cap space is concerned. Let's look at, okay, I guess there is some issue in my software and that's why I'm not able to see. The real estate sector has slipped into the red. All the sectors are now down. Only one index is up and that is the India VIX index, 3.1% higher at 14.7 odd levels right now. That's the kind of sharp pull down that you're seeing on the markets. 23,850 has been breached on the lower side and you have 23,849 right now on the markets. Share.
Ladies and gentlemen, the main cause of pain on the Nifty has been the 2.5% fall on HDFC Bank today, 1721. That's taken out 21 points from the Nifty. SBI has taken out 21 points. 51 points HDFC Bank has taken out. NTPC has taken out 15, L&T 14 and Britannia 12. What's contributed to a very minor extent on the long side on the Nifty is Infosys 4 points and UPL about 2 points. So nothing at all. The advanced decline on the Nifty alone is 6:44. So that's for every one Nifty stock that has gone up, 7 have fallen. And I think we'll have a 300-point fall on the Nifty today. Still about 30 seconds to go. Yes, exactly 300 points on the Nifty. So 23,850, ladies and gentlemen, is now with the bears. And tomorrow morning you will see the test of 23,828. This is the most recent low that happened 4 days ago, and possibly a very, very sharp slide from then on. The Nifty 500 is ended 300 points lower, Bank Nifty 750 points lower, and it was the IT index that was holding forth in the green, but that too has collapsed, giving up early morning gains and now ending in the red territory, 103 points lower. Strong dollar, strong US 10-year yield, terrible set of second quarter earnings is all that we can blame on, and of course overvaluations. Friday is a holiday, ladies and gentlemen, for the markets because of Guru Nanak Jayanti, and of course tomorrow will be the weekly expiry of the Bank Nifty, perhaps the last one, and then we have Thursday which will be the weekly expiry of the Nifty. Sakshi.
All right. Well, we'll thank you, Kush, for being with us on this special edition to share with us what can we expect for the markets tomorrow onwards. in trade, and we'll hope that we continue to get you on board to see how can we take the benefit of this extremely volatile side of the market. 1% lower for the Nifty, over 1.4% decline on the Nifty Bank, 51,157. On the Nifty Bank, 718 points lower in trade. Not a good day as it has panned out for the markets, and we'll just have to see whether it gets worse from here or we see some kind of a bounce coming back. Stay tuned on Business Today Television as we will continue to get you prepared for tomorrow's trade even beyond the stock market hours. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus is on Bank of India's Q2 numbers. It's a reported strong set of numbers